let's roll into the second portion of today's video breakdown, where I have some video clips that I want to play for you all from the Injective Summit live from Washington, D.C. that streamed just a couple of hours ago. Super bullish things were said in this panel discussion. Now, the whole entire video is about 4 hours long. It was a great listen. Highly recommend you all going and checking it out. But just a couple of video clips that I want to play for you guys, primarily just 3. All right. And so the first clip that I want to play for you all comes in at about 26 minutes. And so who are we going to be listening to? This is a gentleman who used to work at BlackRock for over, I think, 2 decades, if I'm not mistaken, if not just 1 decade. His name is Joseph Xlm. He is now the SharpLink CEO, previous representative at BlackRock. And then we're also going to be listening to this gentleman here, Stephen McClure, who is the, I believe, CEO of Canary Capital. All right. So let's just listen to what these 2 gentlemen have to say. Given the current environment that we're operating in now, this is just something to take into consideration, not financial advice. But considering that both of these gentlemen stem from an institutional backdrop and are currently the CEOs of large institutional-based investment firms in this space, or digital, I think SharpLink is a digital asset treasury for Ether, if I'm not mistaken. Just listen to what they have to say. Pretty bullish stuff here.
I think it's just an upgrade of an archaic financial system, and you can just think of it as akin to digitization of a process. I worked at the world's largest asset manager. I had a front row seat on how inefficient it is. The idea that if you trade an asset, you don't receive the asset for a day. And if you trade it on a Friday, you don't actually receive it till a Monday. And if your country goes to war on a Friday night and the markets are closed and you want to express your views on your portfolio, you can't do that. And so the idea that 24/7 with instant settlement, credibly neutral, and I'll translate that into TradFi, no counterparty risk, no settlement risk, credibly neutral, decentralized are words that actually have meaning outside the crypto space. And then the final thing that I think we're largely underestimating is this idea that retail investors right now hold a stock or a bond or a fund, and they do very little to make it productive. You hold cash, it's idle, there's not much you can do with it. When the world of stable coins plus tokenized assets plus decentralized finance happens, anyone can own a tokenized version of anything. It will be composable, which means you can borrow against it, you can lend it, you can use it for leverage, and that will allow retail investors to almost have a CFO in their pockets. If you're at BlackRock or a large institution, they have people who wake up every day trying to make sure no idle cash. If I own a stock, I'm lending it. If I have some other fund, I might use it as collateral. These are things that are going to be part of daily lives, and I don't think you're going to realize you're on the blockchain. We're going to completely abstract the user experience, and no different than using your phone or apps, you don't think of what sits under it. So you can think of crypto being the iOS of the future of finance. And I think it's going to create tremendous prosperity, not just more transactions.
Awesome stuff.
Right. Huge statement from Joseph Xlm, and a wake-up call. If you're not already participating in things that he mentioned, dabbling and practicing with DeFi protocols, lending certain tiny small portions of your digital assets to start to practice and get used to having a digital wallet where you can lend out your assets, earn yield on them, borrow against them, play around in the DeFi ecosystem. Now, I'm not telling anybody to go and take excessive risk playing around in DeFi, because of course there is major risk involved, especially considering the current regulatory landscape. But still, nonetheless, you should be educating yourself about these things. You should be starting to dabble in with test amounts, at least, even little tiny micro amounts, a couple dollars here, couple cents there, just playing around with sending transactions, earning yield on digital assets, lending, borrowing, providing liquidity and liquidity pools, so on and so forth, right? So I thought that that was super bullish coming from an institutional participant in this space and an ex-BlackRock representative, right? Now, this is Stephen McClure. I think the next video breakdown where he goes on to confirm that we are talking to big players about buying crypto assets. Take a second here and listen to what he says.
But some people did. But as we progressed and as this has become a lot more commonplace, we're talking to a lot, financial advisors are deep into buying crypto ETFs, as are insurance companies, pension funds, and even sovereign wealth funds. Sovereign wealth funds, I think, are going to be the next big iteration in inflows. Insurance companies are going to be a little bit further behind because of the way that their capital treatment works. So you have to hold about 30% in cash to hold a crypto ETF or crypto in general, just like you do with a private equity fund or venture capital fund. So it's a lot less efficient for them unless you can create an instrument that they can actually use, like a structured product. So insurance companies are probably going to be very last in adoption, but sovereign wealth funds are the ones that are the biggest buyer right now.
Okay, so considering where we are at in the current market environment, all right, and then this is going to go hand in hand with the next video clip that I play. Markets at a discount. What I think is happening is they're shaking out access retail leverage before institutions come in. They were never, ever, ever in their freaking minds going to let early retail investors that have been leveraging positions on crypto from 2000 and let's just say before 2020, because there's still leverage that sits in crypto of people that are in leverage long positions on Bitcoin that were leveraging Bitcoin sub $30,000 that are still in long leverages, right? Winning. And they're never going to let retail take a leveraged position on Bitcoin up to freaking $250,000 per Bitcoin, right? They're going to come before the institutions come in. They're going to shake out all the retail leverage, drop prices into a discount. And then once all the retail leverage is out, retail's scared and fearful and is just completely distraught. And they're like, what the heck? This is manipulated. They're going to come in and buy in at a discount. And he just confirmed right now that in this environment, mind you, this summit is from 7 hours ago. Okay. He just confirmed that sovereign wealth funds right now are the ones that are the primary interest in buying into this digital asset ecosystem. He mentioned a whole bunch of others, but just go Google how big the AUM right now, the global sovereign wealth funds are, right? Just this is a simple Google search. It says right here, the sum of global sovereign wealth funds is approximately 15 trillion. This is the total spread across 109 state-owned funds worldwide. So $15 trillion in AUM ready to come on to blockchain rails, right? And I'm not going to sit here and say like hypey that all of this money is going to just blink overnight, but let's just say, I don't know, $5 trillion of this money comes on chain. That's still a huge increase from where we're currently sitting at now. And I think that it, in the next, let's say 4 to 5 years, is 110% possible being realistic, right? So just something to take into consideration. You're getting that verbal confirmation from the CEO of Canary Capital here, Stephen McClurg, say that they are in conversation in this current environment with sovereign wealth funds about getting into crypto. Well, the whole entire market right now is discounted, and they're now having conversations about getting into crypto. Put 2 and 2 together, right? So what should we be doing as retail investors? Again, not financial advice, just taking some things into consideration. Last but not least, I have this video clip which goes hand in hand with what I'm saying to you all right now. This gentleman goes on to confirm now's a good time to be buying, right? Take a second and listen to what he says here.
Necessarily hold and custody as a public equity, and they just have tax treatment and RWA treatment as a public equity. I think the biggest challenge, you started with the question of price of crypto. I think you didn't ask this question, but I'm going to answer it. The biggest challenge in crypto today is we don't have the next retail incremental buyer. Much of the retail buyers of crypto have now moved to buy Samsung and SK Hynix and NVIDIA and SpaceX, another risk on asset that they see having an ability to go up 5x, 10x. And until that cycle breaks that you were talking about, and we're able to attract not just institutions, but the next retail buyer, I think it's going to be a bit of a consolidation period and a challenging period. But these things rotate, they move in cycles. And I'm quite confident that, again, the risk reward of entering now is pretty strong.
Yeah, no.
He just said the risk to reward of entering now is pretty strong, which goes hand in hand with my current thesis. In the video breakdowns that I've been doing you all, giving you all level to level updates on digital assets like Canton and XRP, I'm still a firm believer that there's still downside risk in this market, especially considering the fundamental backdrop, the risk off narratives that have been floating around, the Middle East debacle, the potential lingering of the yen carry trade unwind, so many things that could still weigh on risk appetite, but still nonetheless, long term, we are heavily discounted, and the downside risk compared to the upside reward is completely not balanced. Like the downside risk It's not small because it still exists, but compared to the upside return, getting into the digital asset ecosystem at $2 trillion before institutions come in will be something that, in the historical context, years to come, will be something that only a few handful of people from the population will be able to say, I got into crypto, sub $2 trillion, sub $3 trillion, shit, sub $5 trillion in some senses, right? Because imagine when this market cap is sitting at 15 trillion in the future, right? Looking back, you're going to be like, oh, wow, what an opportunity it was to be alive in this moment right now in history. All right. So again, not financial advice. I'm not telling you guys to go out there and freaking put your hard-earned paycheck into the digital asset ecosystem, but definitely take into consideration what these individual representatives with valid institutional credentials are saying to you all on stage in the current market landscape. All right. Hopefully you all enjoyed today's video breakdown. Everybody have a phenomenal and amazing weekend and week ahead. With that being said, many blessings to you guys and gals. Be cognizant, be aware out there. Do us that favor. If you're not already subscribed to the channel, do so now. Smash that thumbs up button. It does help boost the algorithm and push these video breakdowns out to more individuals and like-minded people like yourselves. And I'll see you all in the next video breakdown.